Economic data across industries continues to come in better than expected. One key part of that story, so-called still easy money. Our Steve Liesman's here to explain. Morning, Steve.
Hey, good morning, Carl. Yeah, the buoyant U.S. economy, and we have now the record-hitting stock market of some economists calling for a rate cut pause, while others say the economy could be doing well because rate cuts are expected. Joe Livornia, chief economist at CNBC Nikko Securities, points out that the inflation-adjusted Fed funds rate is near a 17-year high, but financial conditions overall are easing or easy. The gap between the two now at a record. That is, the Fed is tight, but financial conditions are loose, so maybe no need to cut, opines Livornia. He wrote, the upshot is that the Fed should skip action at the November 7th FOMC meeting until there is clear evidence of renewed labor market weakness, which he expects. But not so fast, say other economists. While the economy may be strong because financial conditions are loose, it could be that financial conditions are loose because the economy is strong. You have to understand how it's calculated. Mike Ferroli from JP Morgan tells me many of the financial conditions we talk about are a reflection of how well the economy is doing. Well, to wit, the biggest single factor easing financial conditions in the indices that measure it, it's the stock market. And that could be higher because the economy is in good shape, followed by lower mortgage rates and housing prices, which are also in that index. And the economy could be doing well, in part because rate cuts are expected. Paul McCulley, ex of PIMCO, tells me the capital markets are already pricing to a very plausible and sensible terminal policy rate near 3.5%, thereby bringing forward the supportive effect of a neutral policy rate to large businesses. The still restricted policy rate continues to choke small business and the lower half of the household income wealth distribution. So if that's the case, guys, the Fed has to cut to provide relief to Main Street businesses and households, whether or not financial conditions are easy, because unlike on Wall Street, rates are still punishingly high for small business. Sarah?